As the stock market keeps rising and approaching new all-time highs, and as we enter into the second week here of earnings season for Q2 2020, I'm personally keeping a close eye on my watch list because I'm patiently waiting for certain stocks to go on sale so that I can go out there and deploy my cash. If you've been a subscriber to the channel for the last few months, you know my stance on the market right now, and you know that I'm sitting on quite a bit of cash and I'm waiting for the right opportunities to start deploying that cash. Now, if you're not familiar with my stance on the market and my strategy, here are my top 3 points. The first is that I'm a long-term investor. My goal is to hold stocks for as many years as possible, and I don't care about short-term price movement at all. And in fact, if I do see any sort of stocks drop irrationally in the short term, I use that to my advantage to build an even larger position in companies that I love. The second is that I love my value stocks. These are generally safe blue chip companies that I absolutely love because they provide good stability for my portfolio and provide me the peace of mind for my money, which in my opinion is important if you have a long-term mindset. You don't want to have to worry about big losses with your investments. You don't want to have to constantly be having to check on your investments to see if you're losing money or gaining money and all of that kind of stuff in the short term. And when you have stable blue chip companies, you can rest assured that they will balance out your portfolio and they do tend to provide good long-term gains. The third point is that I'm currently sitting on over 25% cash currently, and I really do want to start deploying this as I see value. And I'm not just holding cash for the fun of it. I'm holding it because I tend to only deploy when I see really good value in the markets, and over the last few months, that hasn't been the case. I do want to get this down to around 20% or slightly below that if possible during this earnings season, and I'm sure we're going to see some opportunities in the coming weeks from big companies once they report their numbers. So today's video is going to be a fun one because I've compiled a list here of 5 stocks. I've gone through my watch list, picked out 5 random companies in there, and I want to talk about them today. And these are going to be 5 stocks that I'm personally watching to buy. Now, these 5 stocks are listed in no particular order, and some of them I own, some of them I want to own, but the bottom line is if there's a value shown in these companies, I will be a buyer. Also, what I tried to do here is when I pick these 5 stocks, I try to pick them in different sectors and industries so you get a more broader range of the type of businesses that I personally look for and that I use to really balance out my overall portfolio. And guys, just remember, I am a huge proponent of tech stocks. I love tech stocks, but I do realize that there's other opportunities out there outside of tech stocks that can still provide you good, consistent returns over the long term. So a lot of the businesses that we're going to be talking about today do have an aspect of tech, but they're not a pure play tech company. But anyways, guys, enough jibber jabber from me. Let's get into the meat of the video. Smash that like button down below to show your support for this, and make sure to watch all the way through to the end if you want to see a part 2 with 5 more stocks that I'm watching to buy during this earnings season. So first on the list here is one of my favorite restaurant stocks, Starbucks, which hasn't had the best one-year performance and is currently down over 17%. This is a good-sized business today, around an $86 billion market cap, but this is a business that, in my opinion, deserves a higher premium. It's a global player, it's a premium brand, they pay a strong dividend, and it's an overall well-rounded business. Now, while this year is expected to be a poor year for Starbucks in terms of growth because of all the store shutdowns that they had to go through, and they had to pretty much reduce the amount of people that were allowed in their stores at any given point, there is a lot of weakness seen in the stock right now. 2021 is looking like a strong year once again as the economy gets back on its feet, and this is where I'm truly excited for Starbucks' future. They expect around 18.7% growth in revenue next year, which would mark a very strong year for the business. And with these growth figures, it would classify this business as a high growth company, in my opinion. Moving on to our second pick is Raytheon Technologies, and this is a very interesting business because it's a newly merged company. So the chart that you see here is a combination of the new business and the old business that merged. The stock is down over 25% in the last year, and this industry is one that is struggling thanks to the issues that Boeing is facing. Raytheon is another large company with a $94 billion market cap and is one of the biggest players in this space. The reason again that it's under a $100 billion market cap today is because the industry-wide issues that it faces, which is a short-term problem for them in my opinion. And when I look at my investing philosophy and strategy, I got time on my side for a company like this to fully recover. The growth expected from Raytheon is pretty decent. Again, 2020 is not going to be a good year for them with over 18% declines, but 2021 is expected to get back to growth by around 8%. It will really take this business a few years to get back to where it was prior to the global issue, but like I said, time is on my side, and any growth right now, in my opinion, is good growth for this industry, and Raytheon is showing positive signs for next year as of right now. So here we have a fan favorite on the channel. You guys know I'm extremely bullish on this company, and many investors feel strongly about the stock one way or another. Regardless, Uber is a business I like, and the stock is down close to 25% as the ride-sharing industry got rocked this year thanks to stay-at-home orders. As of today, Uber is a $56 billion company, which is quite impressive considering the age of the company. But I believe because of the service that they offer and the global dominance that they have, where they are literally the number one or number two player in most markets that they compete in, they deserve an even higher valuation. Their technology is stellar. They are working on AI self-driving cars for rides. And yes, while they are a ride-sharing business, their core really is tech. And that's what makes this such an interesting business to own. Uber has really become a household name. People just use this as a term for any sort of ride that they're going to be taking. And I think that in itself holds some powerful value. Now, while 2020 is yet again going to be a bad year for this company, with the revenue expected to shrink by 9%, look at the next year's expected growth. It's expected to explode by 43%, which objectively speaking is incredible growth for any business. The Eats portion of Uber has been doing well recently, but they still need to find a way to make money in this segment. I believe as long as they can post impressive growth numbers like this, investors like myself will remain bullish on the long-term outlook for Uber. Now here's the first stock on our list that's actually up in the last year and is up by a healthy 15%. Costco is one of the main stocks that has benefited greatly from the global issue, which has made this a fan favorite company to own in recent months. Even prior to this, it was seen as a strong business and a strong stock, but everything that's happened recently has just accelerated their run up. Costco is a $143 billion company, which is massive by any means, and is one of the few retailers that I would personally want to own because of their unique model, membership fees, and superior customer experience. As a customer of Costco, I'm always left feeling like I got a good deal on what I purchased, and in my opinion, this is extremely important for continued success of the business. Now here's the thing for Costco, the growth estimates for the company are not all that impressive if you ask me. Personally, when I see these numbers, it doesn't justify the premium the stock is currently trading at, because 2020 is expected to grow by 7.3% and 2021 by 6.3%, so growth is actually decelerating here, yet the stock continues marching higher. This is one of the stocks I'll be watching closely because sooner or later I do suspect investors will flood out of this name, because quite honestly, even though Costco is an excellent company and is one that's benefiting from current issues, the stock in my opinion is just too optimistic right now and detached from the reality and growth of the business. Number 5 here is Johnson & Johnson, and it's a healthcare giant and one of the most popular stocks for dividend growth investors thanks to their long history of paying and growing dividends. Johnson & Johnson stock is up nearly 15% as well in the last year, as healthcare companies in general have held up exceptionally well during all of these turbulent times. There's a lot of healthcare stocks out there, but J&J in my opinion is one of the most premium, and as a result continues to trade at a premium. J&J is a massive company and nearly $400 billion market cap, but because of what they do and how strong their brand is and the products that they serve to consumers all over the world, this still has room to continue growing every single year as more and more people start to rely on their products and medication. Now, 2020 is expected to be more or less flat for the company with some small declines in revenue, but 2021 is back to growth with almost double-digit growth expected, which for a company this large, guys, is quite impressive. As long as they have this steady growth here in the business year over year, it shows me that things are going as expected for the business, and you really have to realize that this stock isn't going to be one that you're going to double or triple your money in a few months, but if you do end up holding this over the long term, you're going to be rewarded with capital appreciation and that safe, consistent dividend that they keep growing year over year. So now this was just a small subset of the stocks that I have my eye on and that I've pulled from my personal watch list. Here's kind of a sneak peek of my full watch list of companies that I want to buy, and you can see it's quite a long list, but I do track them all quite closely. I do have my cash ready, like I said, and you guys know I want to deploy this cash now, and as soon as I start to see value, that's exactly what I'll be doing. Now this watch list and my live updates of when I buy and sell stocks is all available for my VIP members. So if you want to be part of that VIP membership group and want to know my portfolio and want to know what stocks I buy or sell and when I buy or sell them, check out the description down below and check out my VIP membership group and consider joining. You'll also get access to the Discord group where we have a ton of members in there, and you're able to discuss with myself and others any investment questions that you may have. So what I will say is with these 5 companies we covered today, they all offer me something unique that I want. They either offer consistent dividends, they either offer some stability in my portfolio, or some of them offer some high growth potential. I want to have a portfolio that's well balanced, I want to have a portfolio that's in different industries, and I believe all 5 of these stocks provide me that. They're all well-run businesses, and I've done my research on these companies, and I'm ready to deploy as soon as I see the opportunity because of my prior research. So I'm extremely excited for this earnings season, and I do hope that we do start to see some deals pop up here and there as some irrationality and volatility picks up in the market. Anyways, guys, thank you for sticking around to the end, but now because you did, I want you to comment in the comment section down below with the words part 2. If you want to see a second part here with 5 more stocks that I am personally watching and I'll pull from my watch list, and we'll do a similar video like this because I do have a feeling that you guys enjoy this sort of content. So remember, comment that down below, drop a huge like on this video, and share this video with a friend as well who you think may enjoy this content. But either way, thank you so much for your continued support. Don't forget to invest positively, and I'll see you in the next one. Peace.